And you probably expect volatility, maybe, but just the fact that everything is participating now, banks participating now with gusto, just means that just maybe this rally is not done quite yet. We were talking about this possibility about a week and a half ago. I'm glad it's turned out in that way for the bulls.
So I know you like cricket. It would be right to call this the slog overs. You're right. You're right at the end.
Yeah.
You're right at the end, and this is the one that matters. And we'll talk
as long as Indian markets are not Sunrisers Hyderabad. They lost very badly yesterday in the IPL final.
That even I know. That was a bad one. So I mean, whoever wins or loses, Indian markets should win. Is the idea at the end of it. But, it seems like it's pretty much done and dusted. The fact is phase 7 is very, very important. And we'll talk about it in editor's cut. That 90% of seats are done, but that last 10% matters a lot to what the markets will be watching. Nevertheless, I would say that this has been an optimistic market, largely speaking, but still a little, not completely out there yet in a pre-election celebratory rally. I think everyone's still waiting to see what happens first on the 3rd of June after the exit polls out, and then the 4th. But nevertheless, let's set up the global stage for you and see what's happening there, and some of those cues might be important as well. Now, on Friday, US markets really completely fueled only by the AI boom, by NVIDIA, and the story all about NASDAQ. In fact, record highs clocked on the NASDAQ on Friday. Dow was completely flat, as you can see. Dow futures in the red, but the NASDAQ up about 1%. And the story there, of course, is how the AI boom and NVIDIA and all of those mega caps and their rally is outweighing Fed rate cut concerns. In fact, Goldman Sachs over the weekend pushed its estimate, its forecast to the first rate cut from July to September. And what's really worrying is strong economic indicators. A whole set of them, consumer sentiment index came in from the University of Michigan. You had a whole set of economic indicators which is telling you that the US economy is doing fairly well, and no real trigger for the Fed to cut rates yet. So 4.46% on the 10-year. I think great happening there. Crude, though, has remained range-bound. The Brent still at $82 per barrel, despite now renewed attacks, or it seems like a renewed leg of the Israel-Hamas conflict. Now, news over the weekend that a set of strikes from Rafah into Israel, into Tel Aviv, have taken place. So that's a wait and watch. But then again, that's one of those conflicts that the world is saying is very worrying. It's not impacting crude massively at this point. Asia, let's pull up. Asia opened in the green. The last I checked, it was doing fairly well, and mixed trend over there. But, it's I would say, not a one-way bullish kind of opening for Asia either. So if you look at our implied open, we're looking set to open in the green, but completely flat. The mood is broadly positive, though. I just want to pull up fund flows from Friday, because Friday was an exciting day. You touched 23,000. You didn't see great profit booking coming in. You managed to stay at, decent levels. So 945 was the sales on FISI DIs, about 2,320. We have to wait and see today if we, come back to 23,000 and decisively stay over, isn't it?
Yeah. And important from a psychological perspective, that number as well. But 4,500 crores worth of FI flows for the week is not bad, considering we had a spate of FI outflows all through the last few days, weeks and months, if you will. Thursday number was actually pretty exciting. Now, what's the trade setup really? If you just look at the fact that Bank Nifty is now participating with gusto, it is very heartening from a bull's perspective to see the Bank Nifty, which was the laggard, if you will, starting to come up. 2 days on a trot now. HDFC Bank has been the leading point contributor for the index, and that really helps. Typically when the FI numbers look strong, there is the higher weighted stocks tend to do much better, and therefore it's something that you got to take note of. I think I can, Sikanara and this is the point I'm making. HDFC Bank on Friday as well, 42 points contributing to the Nifty gain. And I think Dr. Sikanara summed it up very well in his weekly note. By the way, I urge all of you who are listening to this, if you don't, you should log on to our website and try and read the weekend piece that he writes about what could happen to the markets ahead. And he says that when the entire market participates in a push of the main indices to all-time highs, it's a clear indication that there is no immediate fear of a top. I think almost everybody is saying 20,000 hit ho gaya, now we'll correct. In all probability, this may not be it. So keep that at the back of your mind, that 23,000 and 23,200 had some fairly, or have some fairly active call options written. And that unraveling might actually push the markets higher as well. So that's to be kept in mind. PSUs are trending higher in the penultimate week of the results, and that is actually the other big thing as well, right? PSU banks may not be doing so, but Nifty PSE has actually had a pretty good week as well, 6% higher, which is also very heartening. Think of a pre-election rally, PSU should come to the party, and I think they are. And amongst pockets which are showing results, I mean, independent of what's happening to elections, results and commentary looking positive, I think the one that has really come to the party is auto ancillaries. Just very strong performance on the results by a clutch of them, and very strong commentary more importantly, and which is what is showing in the price performance. I mean, look at an Uno Minda, look at a Samvardhana Motherson ahead of results. The kind of price gains that the stocks have had in the last 1 week have been pretty exceptional. Uno Minda, I think, was up about 14%. Sandhar Tech was up about 10%. So, that table shows how very strongly some of these stocks have done for the week gone by, and it is actually very, very heartening. So, keep an eye out for this particular pocket as well. But, yep, I must say, in some sense, banks participating is a big thing, and hopefully that continues.
Yeah, and I think 50,000, that's the attempt Bank Nifty will be making over the next couple of days of trade. Also, I think what stood out for me, Niraj and Tamanna, is that this week's rally was led by the large cap names. So the Nifty frontline took the cake, and this is what we've talked about since, I think, end of last year, right? It was only a matter of time the large cap plays catch up and HDFC plays catch up, and that's truly what's happened. You marked that call AI has been seen at levels of 23,000, but what was interesting is 24,000 has also turned quite active, and I think that's what you want to take heart from. So if you've got to talk about a trading range all through March and April, I think, and almost most part of May, 23,000 held a lot of call OI, but now the range is moving upwards. So now you're seeing numbers like 24,000 that are looking fairly active, 23,500 too. On the put side, you're seeing support at 23,000. So that becomes an important sort of tug of war between the bulls and the bears over the next 10 odd trading days. Another quick mention is it's F&O expiry week. So you want to see where that expiry takes place. If we close above levels of 23,000 this week, there's a very good chance the markets will attempt 23,500 over the next couple of weeks of trade. Apart from that, a couple of big events lined up this week. So Niraj has already highlighted that it is a penultimate week before the countdown, but it's also an event-heavy week. So just to quickly highlight that for you, it's the last week of earnings. 2,000 odd companies will report their numbers this week, and this, of course, will wrap up the earnings season for the last quarter of FY24. You've got GDP data coming in from the US on the 30th. Today is the 27th, so in 3 days from now, the US will report their GDP number, important trigger. That will be followed by India reporting its GDP numbers on the 31st of this month. It's important because the number that we're expecting across a broad range of economists is anywhere in the range of 6.5 to 6.7 versus 8% of GDP reading that we've seen over the last 3 quarters. Along with that, you've got auto sales. That kicks off as well on the 1st of June. So again, very important to watch out for. Niraj highlighted how auto ancillary has been the flavor. Auto stocks have also been seeing some buying. It'd be interesting to see those numbers actually justify the kind of buying some of these auto names, barring Tata Motors, has seen over the last couple of days of trade. You've got one listing, so fairly quiet on the IPO space, but Office will be listing on the 30th. So those are a few other factors you want to track in this week's trade. You've got GDP, you've got US and India, and you've also got auto sales. So those are critical data points that may give sectorial or macro direction to our markets. So that's the week ahead, implied Nifty indicating to a positive start. Let's highlight for you what stocks are on our radar. I think it would be fair to say that last week belonged to the Adani Group stocks, right? It was all about Adani Enterprise that largely, along with banks, held the Nifty or helped the Nifty on Thursday make those new record highs. Adani Enterprise went home flat on Friday, but this comes in after a very strong rally that the stock had seen on Thursday itself. So some profit taking is what was seen. But the news there is that the Adani Group, Adani Enterprise will be meeting for a board meeting on the 28th to discuss fundraising plans. Now, that's what's going to keep the stock fairly excited even today. Now, remember on Thursday, we saw the rally in the stock is because there were reports that Adani Enterprise would be replacing Wipro on the Sensex. But contrary to Adani Enterprise, it's actually Adani Ports that has made its way to the Sensex. So that, of course, kicked off on June 24th, which was Friday. And, of course, and that's why you probably saw a little bit of profit taking on Adani Enterprise. But this morning, again, we're waking up to news that they've got fundraising plans. So you want to keep this one on the radar even this morning. Remember, 6 of those group companies from Adani Enterprise, Adani Green, Adani Ports have erased all their losses from the report, from, of course, Jan 2023, and that's what you want to keep in mind. So Adani, again, in focus, lock, stock and barrel, to say the least. Another one that I've talked about extensively has been Cochin Shipyard. As expected, the numbers were phenomenal, and we'll highlight those for you. The stock performance also has been something to talk about. The stock is up 38% in the last 5 trading days, but those are the numbers. Revenues were up 114% at 1,286 crores. EBITDA has also come in at 288 crores versus a loss of 67 crores. Margins have come in at 22.4%, and net profit has jumped 500%, 560% at 259 crores versus 39 crores in the same quarter last year. So again, if it's a stock of the morning, the stock of the day is got to be Cochin Shipyard for all the right reasons. It's had a phenomenal run over the last 5 days, and this morning too, we're waking up to good earnings for Cochin Shipyard. Along with that, a quick mention on United Spirits. We've talked about how alcohol companies have done well. Maybe there's a seasonal element to this, I'm not sure, but election season is the seasonal. Yeah, they've all had a good run, and United Spirits is no different. The revenues were up 11%, EBITDA came in at 42%, margins have also improved quite well, actually 300 bips on margins. Net profit is up about 136% to 241 crores. So very, very strong numbers from United Spirits as well. Another quick one is Torrent Pharma. Now, the reason I mentioned this is because the numbers were good. Revenue is up 10%, EBITDA was up 21.5%, margins have also improved to 32%, net profit is up 56%. But a couple of standouts, they've also approved a fundraising plan of 5,000 crores. Their India business is doing quite well, it's grown 10%, and their chronic business is up 14%. Versus the industry average of 12%. US market has not done well for them because of lack of new launches, and I guess the big fundraising plan will fuel that and help growth in the US market over the next couple of quarters. Other income has shot up quite sharply from 9 crores to 31 crores, and that explains the big jump in EBITDA that you're seeing. Interest costs has come down and tax out was also reduced. So Torrent Pharma had a rough Friday, but I would imagine the stock should see a gap up this morning, guys.
Yeah. Just on Cochin Shipyard, you know, in a lot of these PSU stocks, you've had massive run-ups like Cochin Shipyard, but the numbers have not necessarily delivered. This is definitely one exception. So, yeah, I agree with you. Could definitely be stock of the morning. Another one, which I would say has also delivered, is NTPC. And the numbers have been good. That's the first one on my radar. Revenue up 7.5%. Odd has beaten Bloomberg estimates. In fact, it's a beat on all fronts. EBITDA is up 18.9%. Margins have at 29.8% is up about 281 basis points, and net profits up 33.2%. So it's a beat on all fronts as per estimates. Citi, in fact, has maintained a buy on NTPC and raised its target to 467. Now, in the last 1 month, the stock's doing okay, just about 5.5% up. So maybe in relative terms, more steam to go as far as NTPC is concerned. And that's also what Citi likes. They say valuations are reasonable despite recent stock outperformance. Their renewable capacity has, and the addition in that has slowed due to operational issues, but the capex guidance has been quite robust at 22,700 crores versus 19,300 crores in FY24. So I'd watch out for an NTPC. Aurobindo Pharma is another one with good numbers. Now, this is an interesting company because it's very often in the headlines for not necessarily the right reasons. In fact, even with their good numbers, they have news of a US FDA inspection at their Eugia Pharma formulation facility, which has ended with an OAI status. That's not great, official action indicated. But if I just look at the pure play numbers, they have definitely been good. So revenues up 17%. EBITDA has grown 68.3%. Margins have improved quite robustly from 15.5% to 22.3%. Net profit is up close to 80% for Aurobindo Pharma. And one of the reasons for that PAT increase is expansion in new markets, product launches, stable pricing. So for all the right reasons, Auro Pharma is definitely one to look at. Their ARV revenues have also been good. Their growth markets have been firing well.
Just that point, you hit the nail on the head. The ARV volumes, the way they've picked up for Oro, so important. And the growth regions, Europe and the other growth regions have done so well in this quarter that that's somehow looking like the key point. A clutch of pharma names today, right? Torrent, Divi's.
So Divi is next on my list. Torrent has also been super. But I'll just come to Divi's and then, you're right. Torrent has also been a very good one. But Divi's also because it was one of the key Nifty gainers through the week and the last couple of sessions. And fantastic numbers again. Revenues up 18%, EBITDA up 50%, margins at 31.7 versus 25%. So robust increase in margins and net profits again up 68%. In fact, there's an MOSL note out. It retains a neutral with a target price which is lower than its current price. But they also go on to say that it's delivered a strong beat on earnings in Q4. The CS business, custom synthesis business revival has been a highlight. They've seen better demand, high number of product offerings in the generics segment. So definitely these two pharma companies, in my first cut of names that we should look out for.
Yeah, and exceptional for Divi's simply because all CDMO companies have had a patchy one. In Divi's case, a very strong quarter, margins at multi-quarter highs and very strong guidance for FY25 as well, right? They've guided to about strong growth, decent capex as well, and a very large CDMO plant or a plant for a CDMO client, MNC client, starts from FY27. So multiple sound bites which look so strong on Divi's. So Motilal Oswal is neutral, but Incred and HSBC have upped the target price as well. So debatable, but just the right set of stocks to monitor in the session today. And frankly, from at least on my eyes, those are the main result boys to watch out for. There is maybe a Bosch because auto inks have done so well that little bit of a margin expansion in Bosch, not too much. Just a little. Revenues were up just 4.2%, but margins from 12.9 to 13.2, not bad. A very high PAT jump. Let's see if Bosch reacts today. But I'll watch out for a couple of brokerage calls in today's session. Certainly to watch out for. One of them is a note on Power Grid wherein Jefferies says they've raised the target price to 370 from 305. They say that while FY24 numbers, EPS came off, FY25 and 26 look very, very strong from a earnings perspective. That's seeing minimal change as capex and capitalization both are picking up for Power Grid. It's gained market share in competitive bids awarded in FY24, and smart metering adds to the opportunity aside of bid pipeline and higher dividend payout and higher ROE. They believe the ROE will move from 17 to 18% if I'm not wrong. So watch out for Power Grid and watch out for GMR Airports. Again, a Jefferies note, but initiating a buy call there with a target price of 100. The key line is that they see EBITDA move up 3 times or 3x in the next 5 years. Upmarket spend, K-shaped recovery, therefore airport spends may move up. And then the whole real estate around the Delhi airport, all of that comes into play here. But watch out for GMR Airports is the other one that you should keep a keen eye out for. So these couple of stocks from a brokerage side and a clutch of results that Samina and Tamanna highlighted. Just one thing on Cochin as well, sorry, just because I remember that while these stocks have run up so much, I think it was Garden Reach which came out with a solid set of numbers and the stock reacted 12%
so
if I'm not wrong.
Mazgan Docs.
Mazgan Docs is the
and
other
was
one.
It was also Garden Reach.
Yeah, so these stocks are so expensive, but because they're delivering on numbers like Cochin Shipyard,
correct,
you never know if it reacts today positively.
I think if I had to put money on it, I think Cochin's going to have a great start. And I think that's probably why it was quiet on Friday. We were expecting a good earning. But very quickly, you talked about auto components. I'm going to add Lumax to that list because the numbers were again phenomenal there. Profit was up 74%. Small company, but numbers were really good and hence worth a mention. And revenue have also grown 22%. And 2 more on my list is JM Financial because they've reported earnings and they've actually reported a loss. And now JM Financial has been in the news for all the wrong reasons. Remember, the regulator struck quite hard on them recently and back on, of course, restricting them from participating in new bond issuances. But while their sales are up 59% to come at 1,250 crores, they've reported a fairly large loss of 228 crores versus a profit that they've reported in the same quarter last year, 57 crores. Along with that is another one, that is Spark. We, I think, went through weeks of reporting on a down circuit.
I was thinking about Spark because the way it sort of languished and lived on.
And I think this is one company where you know that the earnings have kept in line, if nothing else, with the stock performance. So very dismal numbers, but again, like we know, that's an expected lines. Net loss has come in at 105 crores. Not like they were profitable before, but nevertheless worth a mention. Revenues have fallen 66 crores, and they are looking to raise about 1,800 crores. So they've got aggressive fundraising plans. So two that could react negatively could be JM and Spark. Spark may be another morning of low circuit for all you know. I don't know how much lower, right, from these levels.
Yeah, but I mean, that's the clutch of names. Really, we can go on because there are a clutch of other results that have come out. But these are, I believe, these are the ones that have primarily react. And therefore, it's about time that we now try and focus on what is it that the editor's cut wants to say, because I think it's the penultimate week to election results. And both markets and elections, Alex, could drive this week's performance, you think?
I mean, let's talk about elections and let's talk about the whole thing, right? And I'd invite both you as well as Tamanna to join us on this editor's cut. We'll begin with setting the context with what has occurred so far till the completion of the sixth phase. But while my colleagues are joining me at the podium, I just want to put something in perspective. I was looking at the dates. 19th of April was when we started, and the Nifty 50 was around 22,000 or thereabouts, give or take. We're at close to 23,000. So in that span, we've gained about 1,000 points on the Nifty 50, which is already quite significant. Of course, it's been a rocky ride. But I thought before we get into the scenario building for the week ahead and also maybe peering further into the future, let's talk about, Tamanna, what has occurred till Phase 6. What are your key readings?
So Phase 6 voter turnout numbers came in, and typically, as we're seeing with the Election Commission, the first cut gets revised upward by close to midnight. So the final figure is about 61.8% for Phase 6. If I compare it completely to Phase 6 in 2019, in 2019, it was 64.2%. So if you look at those in comparison, you'll say, okay, voter turnout is lesser. But if you compare seat by seat, because obviously Phase 6 in 2019 and Phase 6 in 2024 would have some different seats, then you have a change of about 1.5% to 2% lower. So yes, that trend of a lower voter turnout relatively does continue. There could be several reasons. You're now hitting 50 degrees temperatures in some places, so the heat could be one big reason. But we also broke down what it is for NDA and India alliance. So voter turnout in Phase 6 decreased in 41 of the seats that had been won by the NDA in 2019 versus 4 of the India alliance. Now, I must qualify that by saying, because the NDA alliance won a majority of the seats in Phase 6 in 2019. Right. So if there is an overall decrease in voter turnout, then their seats where they won will obviously decrease more. Now, just a point that I was making in the open as well. We're calling this the penultimate phase. Yeah. We're almost at the end.
We are almost at the end.
90% of the seats have gone to polls. Yeah. And you might think, all right, it's pretty much done and dusted. So I was speaking to a couple of political analysts yesterday who pointed out that Phase 7 is crucial because they've gone through all the data post-2019. As of Phase 5 in 2019, the NDA had not crossed the majority mark. They, in fact, did that in Phase 6 and sealed the deal in Phase 7. And the reason Phase 7 also becomes important, you have about 57 seats going, because all analysts are assuming that when you've hit your peak, which the BJP has in most of its key seats in the north and the west of the country,
Uttar Pradesh.
Yeah, you are going to recede. You account usually for a 10% erosion or attrition from your peak. So now you need to make that up, right?
Yes.
So those greenfield areas, a lot of those key seats go to polls in Phase 7.
Wow, okay,
so if you're thinking now, if you're wondering why all of these new memes and great dialogues coming out, and rallies from both sides, especially from the BJP and hammering down 400 and we're done, and we've already won the elections, because phase 7 is very, very important. There are seats in West Bengal. So where are the traction points? There's Odisha, there's West Bengal, and there's UP, where there were 61 seats. So they have room to build up. West Bengal, very, very crucial for them to build up. Odisha, once again, very, very crucial for them to build up. I would add maybe Bihar. There are a few seats in Bihar as well. So phase 7, if you have to make up for whatever you've lost, when the stakes are that high and your performance bar is that high, then phase 7 becomes very crucial.
Basically, picture abhi baki hai.
Picture abhi baki hai.
In fact, the final climax, of course, that we've been building out to. So, what can we do at this stage if you're looking at the markets is to build scenarios. So, Muralidhar Swaminathan has in fact done that, and what we will do is look at those two possibilities, and Niraj, maybe you can weigh in them as well. Why don't you take us through the two possibilities as you see them?
Yeah, okay. So let me put this in context. 2 points. As Tamanna pointed out, phase 7 is going to be crucial. If phase 7 is going to be crucial, the next 4 or 5 days are going to be even more tougher.
Yes.
So from that perspective, let me just go back to what happened on Thursday and Friday before I set the options. Thursday was a roaring market. We all know that RBI's bonanza came. 2 lakh crore, everyone was enthused, including all of us here. And then we saw the indices setting records. You had FIS putting in some 4,600 and odd crores. And you also had kind of euphoria that was built in. But the next day, that is Friday, everything was calm, flat. FIS sold some 900 odd crores, which means that the markets had completely discounted the RBI factor. So what needs to be now looked at is the elections. Now, so you can interpret that as people sitting on the sidelines and stuff like that. What are the scenarios that are emerging? There are 3 options for the investor, I'm saying. Traders, you know better. We'll come back a little later. So option 1 is to say that come what may, I'll go and buy. Okay. And I will make money. On the 4th, I'll be able to do that. So if I do that, if I buy today, and hopefully on the 4th, everything goes well, I will still make some money. Now, this is not about elections, but the problem here is the limited upside. Now, what we are looking at is limited upside. That's scenario 1. So therefore, there is some risk there. So how much is the upside from here? Is it 2%, 3% or 4%? And will it evaporate in the second half of the 4th? That is the question 1 we are asking. Secondly, if you sit back on the sidelines, then the fear of missing out comes. So if something very big happens on the 7th, rather 7th phase, if everything turns around and the exit polls show, then you would have missed out. That's the second scenario. You have to sit back.
But that's a Saturday, so you still have Monday to respond.
Right.
Yeah, that's a Saturday. You still have Monday to respond.
So 3rd Monday becomes very important.
Very crucial. Yeah. So Saturday night, late night, if everybody sits back and then watches, you would have missed out. We are not taking any action.
Can I push in a programming reminder over here? Just a push. We are going to be live on NDTV Profit on Saturday evening, 8 to 9. We're going to be looking at all of those exit poll numbers. We'll have political analysts, markets experts.
And the picture will have emerged.
So tune in. So sorry, quick programming reminder there.
And the third scenario.
The third scenario is buy on dips. I'll say from here till Friday, I keep buying on dips. But will the dips come? Now, even if the dips come, they would be very, very marginal. And that would be there for the smart traders to make money intraday, come back at the end of the day, settle down and stuff like that. Unless the FIs say that, look, we know the numbers, we are going to come in a big way. That's something we'll have to wait till the end of the day.
So, Alex, can I just make 2 observations here? One, you note a cautiously optimistic Muralidhar Swaminathan not talking about a sell-off, right?
That is not a scenario that he's talking about.
Nobody right now has the guts to come out and short the market. And I think absence of short sellers is a big factor in driving markets higher. So I was talking about, in the trade setup, I was talking about 23,000 call options and 23,200 being a large one. We're seeing, as Samina pointed out, not just 23,000, but 24 and 23,500 as well. But the limited point being, large put positions or large call positions still exist at 23. If the opinion polls, in their wisdom, show a clear, decisive verdict. Exit polls. Exit polls. Thanks for correcting me.
Just because it's an important distinction.
It's a very important distinction.
Yeah.
So if the exit polls on Saturday show this, and if Monday the Nifty were to start off maybe 200 points higher, then some of those shorts come for covering. So the upsides may be very brisk. So the dips, as Woody rightly said, may not come. And this thing. But the one very valid point that he's mentioned today, and in his piece that he's written over the weekend as well, I think it got published at 12 noon on Friday, is that not too many people will have also the guts to take very large bets in this week.
On the upside.
So we may not see too many large bets, but I certainly doubt anybody has the guts to go out and short this market.
I agree.
How much of that is going to be based on having gotten completely smashed on Thursday?
All Thursday and through the week from 22,000 odd to 23. The moves have been very swift.
Yeah.
Call writers have been taken to the cleaners, right? There was this Nawazuddin Siddiqui meme that was doing, right? Ke daroz ka kaam, utho, pito, so jao. That was the call writer's position. So yes, certainly.
Just wanted to add one point on the exit polls. In 2014 and 2019, the exit polls underestimated what the final tally would be for the BJP and the NDA in both cases. They showed them as, in the lead, but they underestimated the final tally. So if you take that precedence, I think whoever is coming in on the third should know that history in place as well.
Yeah, so I think we've laid out the scenarios, and of course, I would love for our viewers to tell us what they think and where they're putting their money, whether they're sitting on the sidelines, whether they've already invested, as is the case with a lot of people so far. But let us know, as I said, and there's lots to talk about after this very quick break. We're going to talk about the F&O setup before the start of trade, so do stay tuned.
Welcome back. You're watching India Market Open. Implied Nifty is indicating to a marginally higher start this morning. Remember, Asian markets are trading largely positive, and the handover from the US ahead of the weekend was actually pretty solid. The US will remain shut today, so there'll be no major cues coming in from Wall Street on back of that long weekend there. But apart from that, let's not get our eyes off what's happening on D Street. On Editor's Cut, we broke that down for you and told you how exciting and volatile the street is going to be over the next 10 trading days. But more importantly, we've eked out gains of 2.5% last week and closed in kissing distance of 23,000. On the Nifty, the broader markets were clear outperformers in terms of that. We go into a week which, Tamanna, is going to be extremely heavy. So you've got your GDP data that comes out on Thursday. You've got our GDP data that comes out on Friday. And I don't think things are looking as euphoric because the expectation is 6.5 versus an 8%, 8% that we've seen over the last 3 quarters, but I guess it still remains to be earnings for this last 1 week.
Absolutely. Earnings, elections, all of that in focus. But talking about earnings, Ashok Leland is in focus. The Q4 PAT has grown about 20%, while revenue has slipped 3%. The company targets 25% market share in the LCV segment and aims to launch 6 models in FY25. We talked to the management on their numbers. Listen in.
So I think FY24 was a record year, and it is a little bit special as well because it happened in our 75th year. I think in terms of margins, of course, it's a very good year for us. As I said, we have created records not just in the overall revenues but also in EBITDA as well as in PAT. EBITDA margin, what we clocked was 12%. I think what makes us more satisfied is that, the journey of EBITDA margins that we carried throughout the year. We started Q1 with 10%. And before start of the year, we had thought that we will do double digit in the whole year. But when Q1 we could do 10%, that gave us even more power to improve further. And then Q4, we ended at 14.1. So margin was a good story. I think we could. It was a pretty all-round performance because it is not just one vertical, but all the 5 or 6 verticals they fired at the same time. So power solution business, we had 40% plus growth. Defense business, we could more than double it in FY24. Even IO business, where the markets were kind of subdued, especially SARC and some parts of Africa, we could register about 5% growth even in our IO volumes. LCV, we had a gain in the market share, while the industry was still kind of subdued a little bit in FY24, but we could kind of register some improvement in our market share. And bus segment, we have been number 1. We have regained that number 1 position now in FY24 with a massive increase in market share, and now we are close to 38-39% market share in buses. So I think overall everything worked well, whether it is the mix or our ability to fetch better prices or our ability to cut down on the cost.
All right, you can watch that entire conversation on all our social media platforms. But meanwhile, let's go across to Agam, who's standing by with the F&O queues. Important week, Agam, as we've been setting up ahead of election results, etc. There's monthly expiry as well.
Yes.
And action around the 24,000 levels for the Nifty.
Certainly. There's going to be a lot to factor in terms of prices, the way things have already been positioned as far as this week's concerned. Very, very crucial week, even as we move into that big event next week. But that said, when it comes to markets, at the moment we're talking about the Nifty, it was a flattish Friday, but what we did see was an increase of about 5% in open interest towards what does look like at the moment longs, considering the change in shift in sentiment as far as the markets are concerned. Now, what we did see, in fact, the Nifty is edged higher. It has also tested the mark of 23,000, and the entire range has now shifted higher. I'm going to talk about that range in just a bit, but the Nifty futures, of course, looking at a 5% increase. The Bank Nifty looking at unwinding, and in fact, the futures there are looking at a decline of around 2.5% in terms of its open interest, even as the underlying advances by around 0.4%. So there is a little bit of positivity building in. but it is going to remain a choppy week because of so many events lined up. And even in the run into the big outcome of the general elections early next week is something that we need to factor in. Now, at the moment, as far as Friday is concerned, we saw a lot of writing around both calls and puts. What we are keeping an eye on, keeping in mind the 30th May expiry, in terms of your overall open interest distribution picture, is, well, 23,000. That's where we've seen the most amount of writing in terms of calls and puts. A lot of straddles written there as well. But on the lower end, keeping an eye on 22,500, that's where you have a substantial amount of puts being added. And of course, on the higher end, all the way to 23,500, that's where you see a substantial amount of calls being added. And that strike. It's a 1,000-odd point range, but I reckon that the pivot or the center point now moves back at around 23,000, as indicated by the kind of writing that you've seen both in calls and puts. Moving on to the 6th of June, that expiry. Again, it is essentially the 23,000 calls and puts where there's a substantial amount of both of these strikes written. But and on the lower end and on the higher end, it isn't very different from what you do observe as far as the 30th May expiry is concerned. Moving on to stocks, a lot of more stocks coming through on account of earnings. We're seeing some amount of reactions or shorts for something like an Interglobe Aviation, Apollo Hospitals, Atul, Coromandel next side see longs, and in terms of stocks we're seeing unwinding, again a lot of short covering for Vodafone Idea, Biocon, and HDFC Bank. So we continue to keep an eye on these counters. But moving in, how are we looking at trade as far as these markets are concerned? Well, we have Ajit Rambiar of Ajira Ventures who's joining us on the show. Ajit, good morning. Thank you so much for joining in. A quick brief on your view on the markets, on benchmarks essentially. Ajit, how are you trading them?
Yeah, good morning, Aldo. Thanks for being on the show. So we have entered the parliament election result phase. The overall trend remains bullish with major indices making lifetime highs. So with the India VIX hitting 21-22 levels, we can expect the market to behave in a volatile fashion. The exit polls, which will start from 1st June, will play a significant role in the market movements. We will strongly advise traders to refrain from deploying strategies that earn from theta decay. Rather, one should be gamma long in this kind of markets to enjoy possible big movements. So in Nifty, we have a support at around 20,800 levels. And in Bank Nifty, we have a support at 48,700 levels. So it is a free zone for both the indices once they sustain above these support levels.
Right. So, well, you do know about the supports now. That's Ajit's view. But Ajit, let's talk about AB Capital. I believe you have an options structure strategy there.
Yeah, so we are bullish on this counter. Yesterday, Aditya Birla Group also crossed the 100 billion market cap milestone. So we initiate a bull call spread where we buy 1 May 230 call at 4 rupees 60 paise and sell 1 May 245 call at rupees 1. So the duration of this strategy is up to May expiry and our target is 245. So near 3 rupees 60 paise is the cost of the strategy.
Okay. The other interesting one, Ajit, on your radar is Exide, which has shown a lot of strength. It was, in fact, also advanced it was also advancing by around 2% last Friday. What's the view on Exide here?
So Exide is a trending counter. We have a bullish strategy in Exide where we buy 1 May future. Future is involved in the strategy. So we buy May future at 477.50. Sell 1 May 500 call at rupees 3. 500 is our target price. And buy 1 May 450 put at rupees 3. So we safeguard ourselves by buying a put of 450.
All right. Okay. And so that's as far as Exide is concerned. Overall, on a general basis, of course, the idea is to play a positive trend on Exide too. We also have a handful of broking notes which are or rather maintain a buy on Exide. The valuations, however, at the moment are something that's going to be concerning. With Ajit, on that note, going to take a moment to thank you for joining us and taking us through your views on the markets and also giving us a handful of trading ideas. With that, it's back to you all.
Thanks for that, Agam. Akshay P. Bhagwat joins us now, Senior VP at JM Financial. Let's get the day of trade set up. And I know we've spoken about levels with Ajit to some extent, Akshay, but that's really the big question this morning, isn't it? After we've touched 23,000 and receded in last week's trade. What is your own assessment for the Nifty, Bank Nifty today and this week?
Good morning, Tamanna. Thanks for having me on the show. Well, it's a freeway ride for the Nifty. As I look, new landmarks have been conquered. 23K is the new landmark which Nifty hit in the prior trading session. And the way the index is setting up, it seems that there is still more room to go. We clearly have a technical breakout a couple of trading sessions back at the level of 22,800, which now defines the support for the Nifty index. And ahead of the general election outcome, your exit polls, which might bring in some bit of volatility in the market, the direction is pretty clear that we are heading for the next area where the options action is concentrated, which is roughly around 23,500. So the levels to watch is, with the positive view of 22,800 support, Nifty should aim immediately from an intraday basis maybe 23,125 to 23,200. These are the two set of target areas you can work with. But broadly, the trend is up, and you should work with supports, buying on dips in case it does offer an opportunity. But broadly, till the election outcome is out, I think 23,500 plus is where Nifty should be heading for.
Before we go into stocks, I want to start with these defense names. Do you feel like the euphoria could continue? Cochin has reported pretty strong earnings. Stock is up 40% this week. So Cochin, Garden Reach, Mazga Dogs. I know they're not in the F&O space, but at least on the charts, what do they look like? New records again today, likely?
Yeah, good morning. I completely agree. It's more of a theme-based rally, and clearly most of the names which you have mentioned have had their fair share of gains very fast and in a very short time frame is what I look forward to. But now at this moment, if I were to say whether I need to buy these stocks or not, my answer would be wait for a slight dip, because on the technical parameters, most of these names from the defense pack are highly overbought. So yes, the trend is strong, the upside is still there, but we need to get a good entry into the stocks, for which I would suggest that buy on dips would be the right strategy. So for Cochin Shipyard, 1800 would be the support I would look forward to for buying on dips. The view is positive, but hold on to your horses. You might get a dip, which would be a good entry point for the stocks.
Right. Adani Enterprise, Akshay, is that on the radar? Again, solid week. Thursday was phenomenal for the counter. Friday, after a positive move, in the last hour or so, it did see some profit taking. So Adani Enterprise and Adani Ports, if we may.
Oh, well, absolutely. I am pretty bullish on both these names. And if you look at the way the stocks are setting up ahead, they have somewhere or the other, they have some good correlation with how the election outcome would behave. And my sense is that both these stocks are very strongly poised on the charts for major gains on the upside, even if you are considering them from adding onto your portfolio. So yes, buy from a trading or from a positional perspective in your portfolio. The levels which you would see for Adani Enterprises first, where we saw a strong breakout a couple of trading sessions back. So 3350 is a support zone. The immediate trading target, if you're looking from a short-term perspective, would be somewhere near 3600. And from a positional perspective, with maybe a couple of months holding all-time high levels near 4200 is where I see Adani Enterprises heading for. Moving on to the Adani Port stock, Adani Ports too has good momentum as we look at the trades which we saw lately. A bit overbought for comfort, but positionally the stock still has room for going maybe 1550, 1600. That's the upside I project, going by the current momentum parameters. So yes, consider buying this, but more from a slightly positional perspective, 15-20 days of time frame horizon. The support area is 1350, and the target roughly works out to 1550 to 1600.
Okay. The other thing is to focus on, I don't know, we've been kind of talking about this all through the morning, but auto and auto anchs and the consensus set of stocks on which there is just so much of an upside on target prices or the commentary. So Ashok Leyland is one stock that features in that list, which has seen consensus brokerage upside. So watch out for that one. The other one is Exide, on which Nomura, JP Morgan, Investec, all of them have raised the target price today. The stock had a big move in Friday's session before cooling off a little bit, but still at 474, packed a little bit of a punch. So do watch out for this one. And the commentary from Excite that has come in, wherein they've spoken about how some of the new plants will come on stream by FY26, as well as FY25 to see some other advantages coming in. They have outlined the capex that they want to do. All of that points to maybe some optimism in the session today. Akshay, for a stock that has done so well, it did come off a little bit from intraday highs on Friday. How do the charts look for a short-term trade?
Well, auto and auto ancillary stocks have been the flavor of trading recently. And for Excite Industries specifically, yes, it did cool off a bit in the prior trading session from the day's top. But really, that's not a matter of concern if you're a trader, because this stock is aiming for a consolidation breakout. The broader charts are very strong, and it did attempt a breakout, but unfortunately, we did have a cool off. You have some upgrades coming in from big broking names, so that should kind of support and fuel the momentum further for Excite Industries. So those who are holding on to Excite Industries, I believe 525 to 550 would be the trading targets one can work with. The support area is 450. Even if one wants to consider a fresh buy, they can go ahead and consider buying this at the current rate. For 525, 550 is the target area one should be working with a positive view in Excite Industries.
Akshay, let's get your top picks for the day.
Yeah. So my top picks for the viewers, one is ICICI Bank from the private banking space. It's a very strong chart which I see in ICICI Bank, and I believe banking is one area where the bank Nifty is headed for 50,000 plus. The momentum is very strong. It is kind of shifting between PSU and private banking space, but my sense is private banking should hog the limelight, and ICICI Bank is one of the top names which fits this bill. So buy for target of 1174 to 1195 ICICI Bank with a stop loss of 1097. And the second trade is in Voltas, which did see a consolidation technical breakout in the prior trading session. Volumes are good, delivery volumes are picking up, open interest is adding in the futures and in derivative segment. So target 1405 to 1427 in Voltas with a stop loss of 1347.
It's a bank and Voltas. But Akshay, you didn't mention HDFC. Just get your thoughts on that one too, because it's done well over the last few days, hasn't it?
Oh, yes, absolutely. HDFC Bank has somewhere defined a support at levels of 1425. Time and again, if you look at the charts, these dips have been bought into. Somewhere the momentum is trying to catch up. In the last two trading sessions, the move has been good from 1450 to 1520 odd levels. And this is one of more of a defensive bet, I may say, considering the price nature the stock generally has. So yes, if you are keen on kind of buying the stock and holding it for maybe 10 to 15 trading session, the nature of the price chart perfectly fits your bill. Target area would be 1575 to 1600. Support is 1450. So yes, definitely HDFC Bank would fit as one of the good buy trades from the private banking space.
Okay. So that's on banks. The other interesting one today could be Z. Just pull up Z for the last 5 days, and the stock has just seen a bit of a bottoming out, but remember it was in an FNO ban even on Friday. In today's session, Z is out of the FNO ban, and therefore could be very interesting. A lot of HNI, a lot of smart money is very interested in Z Entertainment, and because it's out of the ban, just watch out for this one in case there is a bit of a reaction. By the way, guys, speaking of FNO ban, Vodafone Idea came out of the ban for one day
back in.
on Friday, went back in. But just look at what the stock did when it came out of the ban. It got people a chance to accumulate the stock. The stock did really well.
But that's in the FNO space, if you're
exactly.
looking at it.
Yeah. So but it came out of the FNO ban, and just promptly look at the kind of buying that happened. That the over positioning in Vodafone Idea on that one day when it was out of the FNO ban was so large. I think 1.38.
It was fueled by the UBS note as well.
Yes,
things.
most certainly. But just that. When stocks are in a frenzy, I'm not saying Z will do the same thing, by the way, no idea.
But Niraj, on
so
Z, on the weekend, I was talking to a few people, and apparently there is again the whispers on the street that Z could be up for a takeover.
That's because NP Singh has stepped down.
I have not been following the stock, so it'd be unfair for me to say anything on it.
I'll tell you why. Because the whole fight between Zee and Sony was that Sony wanted the merged entity to be headed by NP Singh.
And now that he's stepped down, the humors are back on.
They have to find now a successor for him. Why has he stepped down is not clear. So
could be a contra bet.
Is his stepping down been seen as paving the way? It was all a question about leadership, right?
So
Who
that's
would run
what the story
entity?
is. And if it is a contra bet, just like Vodafone was a few weeks ago, you never know what Zee could do. There are talks of it doubling down now. We'll have to wait and see if that turns out to become reality.
A lot of smart money, I must say, is very constructive on Zee
and Vodafone Idea.
And by the way, the stock has rallied a little bit from 134, 135 in the last 1 month to 151 for a stock that was completely written off.
Also, let's not forget 6 months ago, from the 6-month period since all this started, it's down to what, 50% of
so
its
it's
price,
certainly
right?
come off, but just
So
at the last 1 month,
maybe,
it started to move up a little bit, and today it's out of the FNO band, so could be very interesting.
Nothing has changed for it fundamentally.
Yeah.
NP Singh stepping down?
I mean, that's Sony's change. They're still very separate entities who are fighting it out in court as of today.
Be interesting. We'll see how this plays out in the next few months. Whether or not this becomes a 300 rupee stock is going to be something to watch for.
Well, the big action today is on Pharma earnings, and we should quickly get Varsha in, who's been looking at all of those numbers. We mentioned some in the setup, but more on that list that Varsha has. Varsha, take it away.
Good morning, guys. So if you see, starting with DV's lab, good set of numbers. Revenue was up 18%, but if you see EBITDA was up 50%. Margins were 31% versus 25%. If you see the key highlights, custom synthesis have driven this earnings. Custom synthesis is nothing but when you make product exclusive for someone. Improvement in margin was led by better product mix because of, again, growth in custom synthesis. If you see the generic business, which formed 41% of revenue, now owing to pricing pressure, this generic business dipped 7% year on year. In Concall, so Divi's is expecting, if you see the Concall highlights, Divi's is expecting double-digit growth in FY25. Then we have Aurobindo Pharma, where revenue was up almost 17%. And if you see margins were 22% versus 15%. If you see the key highlights for the company, the US formulation revenue grew almost 21%, and growth markets revenue increased by 49%, while that ARV revenue, which is a drug for HIV, increased 31%, and API revenue remained flat, and they are expecting 21 to 22% EBITDA margin for FY25. And while if you see, Glenmark also posted results. Now, the India business for the Glenmark grew 12%, while North America decreased again 12%. But high tax, if you see the net profit, actually Glenmark had posted net loss. Now this is because of the high tax that Glenmark has to give because of the other income that Glenmark has received. So this is all we have on Pharma earnings.
Yeah, most certainly. And Varsha, I think we'll watch out for all of these names as well. In fact, viewers, you've just heard Varsha. We'll try and hear from Deven Choksi fundamentally on the other side of the break about what could the view on some of these pharma stocks be and more. Stay tuned. We'll be right back. back with India Market Open. The pre-open rates about to kick in. Remember, the implied open was suggesting a marginally positive start. US markets are shut today, by the way, so keep that in mind. We don't have too many global cues after close today, at least in terms of the US market, so that's to be kept in mind. But 36 seconds left for the pre-open rates to come in, and we'll mark them, of course. Devin Choksi, Managing Director at DR Choksi Investment Managers, Johnson right now on the show. Devin, good morning. Thanks for joining in. Just teeing off from where we left off the segment before, and we were talking about pharma. So we'll start off with that and then go to the larger markets. But the numbers as they are trickling in, while they may have been mixed, some of them have been very strong. Aurobindo Pharma has had a very strong ARV performance, and thereby the numbers have looked solid. Divi's, for all the brickbats that the stock has received all through the last few months and quarters, has delivered a very strong quarter 4 and guided to a strong quarter 5 as well, and some others. What do you make of these numbers, particularly these two, and the pharma pack at large?
Yeah, Niraj, good morning. Well, I think Divi's in particular, it's more convincing, largely in the area of the APIs and the CRAMS setting which they have. Generic APIs particularly, I think, where they are having a strong position. This quarter onwards, and maybe in the last quarter also, some signals were already there, including in management commentary, that they are turning around in this particular business particularly. In previous quarters, I think maybe a couple of years, I think, have happened in this situation, wherein they expanded the capacity and the customers failed to probably, I think, give sufficient amount of orders particularly. I believe that I think that situation is over, and they've been repeatedly saying about it that I think customers are approving the products, and we are going to get started with commercial dispatches and all. That is where probably I think the outcome is, I think, in this quarter. Of course, I think the numbers look smarter on the growth front, but it is also because of the fact that in the last year, similar period and in earlier quarters also, they've had a low base situation, which is probably now coming to reality, wherein I think you are going to see the decent level of growth coming in. Should they continue to grow in the vicinity of around 20% plus, this may be exception numbers, but I think even if I think they sustain a 20% plus numbers on a growth rate, I believe that I think the company is well set for further appreciation from here on in the portfolio of investors.
All right, just take a look at what's buzzing in pre-open. Divi is doing fairly well. So is Oro Pharma, some of the stocks we talked about. I want to pull up Godrej Properties. We've not talked about that pre-market, but Godrej Properties is an interesting one. Because remember, there was news that one of their projects in Mumbai suburbs had hit a roadblock because it was too close to a defense installation, and there was some protest there. They have come and clarified, saying that they have got no such response. Let's just see what Divi's is doing also this morning. Some of the stocks that we talked about, the numbers being received well, at least in the first few minutes. Cochin Shipyard is another one that I want to see. NTPC as well, and see what these counters are doing. Nothing specific on Cochin Shipyard so far. NTPC also, the numbers being received fairly well. Devin Bhai, good morning. Tamanna here. Just wanted to get your sense on all of these PSU stocks, defense stocks. We are in that last week before results, and people watching, by results I mean election results, not the corporate results. It's the last week of that as well for this season. And people watching the show right now, the program right now, are possibly wondering if this is a good time to enter. Have they missed the boat? Has the run-up been too sharp already? What would you advise them, especially on a couple of the stocks we talked about right now? Let's take a Cochin Shipyard, for example.
Yeah, Tamanna, good morning. And I think fortunate example as well. I think look at the size of the order book that they have. They have never had this kind of visibility for 3 years to 4 years, kind of a business execution visibility. Fortunately, up till now, whenever we have seen the results of the company, they had the influence of tighter margins, and probably the government was reluctant to pay higher margins. But as we hear from the companies, respective companies, of course, I think, and everywhere they are being similarly echoing, that here the government is willing to pay the margins at the same time, which means that I think in the previous years, I think the contracts which they've been executing, there have been, I think, the tighter margin contracts, and that is where probably I think the growth was not seen very visible on the profit front. Today, I think the situation is completely different. I think if you see the numbers, both at EBITDA level as well as at the PAT level, I think the numbers are looking extremely healthy. And that's where probably I like to believe that if these companies continue to grow at a rate of around 20% average growth rate, considering the fact that I think the GDP is growing at 11, 12%, and 50, 60% alpha on the GDP, I think that is how I look at the growth in these businesses. I believe that I think they will continue to remain in the strong books of investors. However, most of the companies have had a smart run, and at the same time, I think the valuations are quite reasonable at this point of time. This market has a tendency to do corrections, and the corrections, I think, when they come in a sharper degree in a shorter period of time. So if a sharper corrections come in a shorter period of time, I think one should be ready with cash to deploy. I would think that I think anything at the headroom level of around 10-20% in between, and that correction gives you that opportunity. I would think that I think it's a buy opportunity at such point of time.
Right. If that dip comes, be ready with cash to load up your position on some of these defense names. What about Adani Enterprise? Devin, you've seen that move from last week. I think Adani Enterprise, along with banks, was probably responsible for that big flows on Thursday. At these levels, attractive, you think?
Well, yes, Samina. Good morning. Well, I guess I think the Adani Enterprise per se is sitting on a prospects of value unlocking. You have multiple verticals, be it roads, be it airports, be it data center, renewable energy segment. I think each of these verticals have the typical characteristics built into it, wherein they're incubating these verticals, making them cash positive, and then subsequently list them as a separate company. As a result of this value unlocking proposition that happens, which is likely to happen in next 2 years, I think in respect to verticals, I believe that Adani Enterprise gives you an opportunity to get the value unlocking out of some of these particular verticals. And I would think that I think that would be a time to buy such kind of companies. Maybe the market has reacted sharply in last 2 days. Maybe I think expectation of election results, maybe the infrastructure play, all those stories are floating around. But if one is looking at 2 years kind of horizon, then probably I think this is becoming a good opportunity to buy into. Any corrections in this price more than welcome. If you are buying for 2 years and above, I think you should be buying in the corrections, of course.
That's Adani Enterprise. It's got value unlocking underway, like Devin says. The stock is expected to see a flat start this morning. Apart from Adani Enterprise, what were the other Adani Group companies, Devin? And Ports and SEZ, I mean, a whole bunch of them are trading way above their Jan 2023 levels currently. So more wealth creation there?
In particular, Adani Ports, I think you already have 500 million metric tons of cargo handling capacity across the different ports that they have, including the overseas acquisition that they have done. The important aspect is India territory, the east-west connectivity with these ports. So which means that I think one customer, and I think providing them multiple berths in different ports, is something which is a very difficult proposition to beat when you are a typical port company and offering solution to the customers. I think this is one opportunity that they are getting, that the single customer and higher amount of revenue. That's where probably I think this company is basically fetching higher yield as well. So in my viewpoint, I think with the mix of the bulk cargo and the liquid cargoes that they have, I would think that I think they have got a blend margin of a significantly higher percentage, which is where probably this company is well positioned. Of course, I think getting added into the Sensex and other things would probably, I think, gives larger amount of funds injected into the stock. But overall, the fundamentals remain extremely strong. I would think that I think the cargo handling capacity which they have created is systematically getting added with the higher amount of inorganic approach that they have adopted. And that is where I believe that I think they should be easily compounding at the rate of around 20% or so on the volume front. So given that proposition, I believe that I think it's a story to buy, probably buy into this portfolio. Maybe correction would be the best time to add some further into the portfolio.
All right, let's take our top brokerage picks this morning. Harsh joins in with the top two that's on his list. Yes, Harsh.
Well, to start off, Citi on NTPC, 25% upside is what they see from here. It's their top pick in terms of Indian electric utilities. Of course, power play largely in focus across the board over the last couple of quarters at the very least, and this is what Citi believes is their top pick. First off, with regard to growth going forward, they've planned to order roughly 15.5 gigawatts of thermal capacity that will be added. In fact, for FY25 itself, 3 gigawatts to be added, and then thereafter FY26, 27, 5 and 8 gigawatts respectively to be added. Of course, a very strong set of numbers as well. But on top of that, the capex guidance as well remains very strong. 22,700 crore odd is the FY25 guided capex versus the 19,300 odd crore in FY24. So capex is upped versus FY24, which will mean steeper investments going forward. They've in fact hiked their price to book on NTPC as well, which is Citi. They've hiked it from 2.25 September 25. They rolled forward their estimates to March 26. And they've hiked the book value to 2.5 times, giving it a 467 rupee target price from the earlier sub 410 levels. So that's a steep hike in that sense as well, post the numbers. Second one is a very interesting note. Jefferies has initiated coverage on GMR airports. They believe, of course, land being one of the levers, but outside of that, just the airport opportunity in India is fairly large, and GMR airports has 25% plus in terms of passenger traffic market share in India, and therefore is very well placed according to them. New capacities, of course, continue to be added both in Delhi and Hyderabad, where GMR has a presence, and they are expecting the EBITDA to grow by 3 times in the next 5 years. Also, PAT positive FY26 is what Jefferies is penciling in terms of their estimates. Of course, aero tariffs is the other piece where they see upside, and the airports itself as hubs for shopping for customers and passengers is the other piece, which could be another lever for GMR to unlock value. Regulation is possibly a downside risk, and that's one that we need to keep our eye out on, is what Jeffrey suggests. But outside of that, 100 rupees is the target price, 15% upside from here.
Thank you for that, Harsh. GMR Airports and NTPC on that list. Let me quickly take a view from Akshay on both.
Yes. So I think the reaction post results for NTPC should be extremely positive. The chart structure is definitely strong, and if you look at the way we closed on Friday, possibly it's heading for 385 or 390. That's the short-term projection I hold for NTPC. The support area is 360. So yes, you can consider it buy on the opening in case it's flat to a decent opening. So yes, NTPC is a buy. And if you look at GMR Airport, GMR Infra. So GMR in Airports Infra 2 is in a consolidation. It is in an accumulation zone, has been quiet for pretty long time, but on a positional front, 100 plus targets are what seem to be in the making. So consider accumulating it. 75 to 80 roughly is the support zone. Have a slightly positional view, but this stock definitely should be aiming for targets of 100 plus. Around 105 is what I foresee in the short term for GMR Airport Infrastructure.
Okay.
GMR Airport Infra doesn't surprise us. It's a key call from Jefferies. And remember, brokerages give this target price from a 12-month perspective, and that's why the target is 100. But they talk about the EBITDA being 3x in 5 years, premiumization. Actually, Devin, very quickly, we just have less than a minute, but just wondering, do you like the airport play? There is GMR Airports. Maybe there is an IPO from the Adani side on the Adani Airport Holdings business as well. Do you like the airports business? Less than a minute, Devin, left.
Yes, Niraj, I think one of the key points for which I think you like this particular business is the ability to generate daily cash and working on a negative working capital. I think this is one business which scales up, I think, systematically after initial rounds of capex that you put in. And that's where I believe that I think one could argue for the likes of Adani, the airport business, or even for that GMR case, I think businesses.
Okay, so that's the view on the airports business. About 30 seconds left for the markets to kickstart trade. Just bring up the pre-open rates for the Nifty and the Sensex for a moment, and let's just see how the pre-open rates were before we get to the actual rates. About 1/3%, so not a bad start, at least in the pre-open session. The key is whether we can build on from this, because the point number is slightly higher than what the implied open was suggesting at the start, really. So that's the key thing to monitor. And then within that, what are the stocks that will react? Will HDFC Bank still be the biggest one to gain in the session? That's one to monitor. Can ICICI Bank participate as Akshay's top pick? And can some of the others come in? Metals, I think Samina was pointing out, have by and large done okay thus far. Will we see a Hindalco, Tata Steel and some of the others participate? Let's figure out. But here are the first trades, about 80 odd points. Not a bad start at all, you have to admit. The mid caps and the small caps will come up on your screen while the Nifty and the Sensex are here. Nifty Bank, agree. Let's point that out, 0.21%. Maybe HDFC Bank is not participating as much. Bring up the mid caps and the small caps. 1/3% for the mid cap space, the small cap index, 0.68%. This is where the action seems to be. But get the heat map up. And Tamanna and Samina will mark the broader end of the spectrum. Adani Port promptly reverses 2.5% higher, very strong show, and Divi's reacts to its numbers. So the top two draws. Hindalco has brokerage upgrades today. Jeffries, for example, is up the target price. That is doing well. But metals, by and large, are doing well, courtesy maybe just a bit of stability there, because we also see Tata Steel and JSW Steel in that list. Not too many losers. I think Adani Enterprises suffers from not being a part of the Sensex. So what is Adani Port's gain is Adani Enterprises' loss this morning. But there's a fundraise meet tomorrow, so be careful. Be mindful of any kind of movement there, which might be swift here. Aside of that, not too many losers. So it's between metals, Adani Ports and Divi's Lab, the pie for the top draw. But in between, must not forget that the City note on NTPC is also evoking a bit of a reaction on that stock, up about 1.5%. Not to forget, of course, that the numbers too look pretty solid out there in NTPC's case. Tamanna.
And we're above 23,000 quite comfortably this morning on the Nifty once again, which was expected because you closed close enough. Just Wipro to mark also that Sensex swap may have impacted it negatively. Just let's pull up the mid cap and the small cap indices and quickly see what's happening there before we get to specific stocks this morning. Also up in the green. So no breakaway rally of sorts, but holding on fairly high levels, and after a fair bit of run up, the small cap indices index doing actually better, close to 1% up. Specific stocks, and NTPC mentioned by Niraj, but I'll take that again because NTPC, good numbers. That City note seems to have helped it all around. Jeffries has also maintained a buy with a target price of 445 rupees, about 1% up. Power Grid is another one which has a buy call today, but completely flat. Cochin Shipyard I wanted to pick up and see because great numbers, and it's being saluted by the streets. 7.5% up. Remember, its profits have gone up 5x and more. United Spirits has a stellar set of numbers, 1.5% up on that stock that has been rewarded. And then that whole pharma group of companies which have come out with good numbers on the face of it, but Aurobindo Pharma not really doing well. Remember, they also had a negative US FDA notification which could be dampening that mood despite the good numbers, and we pointed that out on the trade setup. But Divi's Lab, of course, doing fabulously. Torrent Pharma as well. Oro Pharma, the numbers all looked fine, but in the red today. I just wanted to pick up RVNL. It's emerged as the lowest bidder for a construction project from MMRCL, and that has really worked for it, 4.5% up this morning. So a whole group of stocks that are responding positively to news. I would reckon, Samina, apart from metals, defense is still on top of mind.
It's the same thing every morning, right? All these counters. This morning, cheering Cochin Shipyard, I guess. So that's the broader that's the frontline index that's up 0.3%. Let's do a quick check on Bank Nifty and the mid-cap space. Remember, Friday's close, the Bank Nifty was 2% off its record highs, now about 1.7% away from its record highs, 50,000 in sight for Bank Nifty at some stage. Broader markets for a change this morning as compared to last week are seeing a little bit of outperformance in trade as compared to the benchmark. There are lots of earnings that the stocks, that the markets are reacting to. Bosch, I don't know whether we've highlighted that for you already. Their profits have come in. The stock is up 3%. Good one on Bosch. Lumax Industries as well. We'll pull up the other auto ancillary player to get a sense of what's happening. 3.5% lower despite those numbers not being too bad for Lumax, but Bosch gets a thumbs up with a 3% up move. Karnataka Bank reported numbers that were not very impressive, at least on the face of it, and the stock gets a thumbs down, trades the cut of 3.5% as well. Torrent Pharma, Tamanna has indicated too and talked about Glenmark, Aurobindo, Torrent, all those counters seeing an upswing in today's trade. Along with that, you've also got India Bulls Housing Finance and JM Financial. If I can get India Bulls Housing Finance, let's see what it's getting up to. JM Financial along with it should see a negative reaction. India Bulls Housing is up 2%. JM Financial is trading flat as we see it. ZF Commercial Vehicles and Paras Defense. Paras Defense numbers were not as impressive as the street would have liked. It doesn't keep up with the rest of the theme across defense, but the markets don't seem as disappointed. The stock trades flat to slightly lower. RCF is having a pretty solid morning today, so it's a 6% up move coming in on RCF. That's the counter in front of you. Zuari, Agrochem and DOM Industries also reported numbers. So did Sun TV and Easy Trip Planners. All those counters are seeing a movement. 2% higher is what we've got. DOMS is up 4.5%. Sun TV is on 1.5%. Inox Wind, which went exponents, is having another very solid morning. Gains on this one are pretty good for the whole month. The counter is a top trader up 6%. For Adani Enterprise, the cup there is getting deeper. It's down 2.5% as we see it right now, largely on back of it giving up some of its gains as the rally was backed on expectations of it coming into the Sensex. Fundraising plans as well lined up. The board will meet tomorrow to take stock of that, and you will see the counter on the radar, but some profit taking not being ruled out yet. Rail Vikas Nigam, which Tamanna already mentioned, is looking good. IRB Infra is also up 4%. Some of your Actually, the whole pharma pack is looking good. Affle India, that one's also up 4% on post earnings. Railways continues to look good. So you've got not just RVNL, IRCTC is also having a positive morning. IRFC is also trading well. But Rail Vikas is your top gainer. Cochin, after seeing a gap up of 8%, has seen some profit taking in the last couple of minutes. So it's now down to about 5.5% gains. 4% off from the day's high point, but still in positive territory. So could be a morning where you see a little bit of profit taking at higher levels, and you see some profit taking at higher levels, which could bring the counter slightly low. But Mascot Docs also doing well along with that. Astra Micro is up 8%, so that's the other one. And Garden Reach not doing too badly. BDL, a quick mention on that one because it's had such a strong rally. It's up nearly 70-80% last in the month of May. Another 3% being added to BDL after the stock split. So defense and pharma, I think, are having a pretty sweet morning. Railway counters also looking good. Akshay, you want to come in on RVNL, IRCTC, because that one hasn't moved, and IRFC?
Yes. So for RVNL, it's been a one-way journey for this rail counter, and from 250 to 393 where it currently trades, it's in an overbought zone. So fresh entrants, I would say wait for some cool off. But if you own this stock, I think there is more upside. Probably 415, 420 is the targets I project. So hold on for those targets. Those who could not buy it, maybe if the stock offers you a dip till 375, that's the right price to get into RVNL. So positive view. Moving on to IRCTC. So IRCTC too is kind of cooling off today, but broadly the chart structure is strong. I suggest that you can consider buying this. The support is very strongly poised at 1080. So even if you buy it at the current rate, it has a potential to move up till 1175 from a short-term trading perspective. So that's the target you should be working with IRCTC. So rail counters, yes, there is more room to go. Consider buying it at the current price. IRCTC is a better bet considering the fact that it is cooling off and offering you another entry at the current rates.
Pharma stocks at the toast of town. Torrent Pharma is 4.5%, Divi's Lab 4.5%, Glenmark Pharma 5%. Glenmark is the other one. By the way, the reported numbers may not have looked okay, but the balance sheet, it's net cash positive now versus net cash negative 1 year ago. 3,000 crores of debt versus net cash positive now for Glenmark. I think that is what is driving this stock this morning. We've spoken about it fundamentally. Akshay, very quickly, technically, Glenmark Pharma.
Yes, a very strong reaction to the results. It's a positive development. The recent swing high of 1095 is where it is trading. Maybe for day traders, 1100 is where you can look at there. Some cool off is possible. Positionally, 1130 to 1140 is the short-term target I foresee. So hold on to this stock or buy the current rates. 1130, 1140 is the target area, and your stop loss or the support zone roughly is around 1040.
Devin, are you looking at Vodafone Idea constructively right now? Actually, two companies. I'll add Z Entertainment in that same breath. So Z Entertainment and Vodafone. Do you feel like a turnaround could be in place here, and they both could be good contra buys at these levels?
I think in case of Vodafone Idea, they are in a kind of a stick situation, I believe. On one side, I think their ARPU stays in the 150-60 range. And on the other side, I think their peers are having ARPU of 180 plus range. So obviously, I think if they have to score numbers, I think they have to score numbers, I think, in this particular ARPU range. Now, here is the problem that on one side, Jio kind of a player is not willing to increase the price. Largely because of the fact that if they do, then probably I think the larger amount of 4G customers of Vodafone probably I think would find significantly large amount of I think the advantage, because I think Vodafone could possibly increase the prices, I think, to comparatively lower numbers, and Jio may shift over there. So this is a very complex dynamics that one is now getting into. Second point is the amount of money that is required. Currently, with equity along with the debt, I think 45,000 crore is being deployed. Larger part of the money is being deployed on the 4G and smaller one on the 5G. Whereas I think the move has been that higher amount of database application and the use cases on the 5G side. So to a greater extent, I think the larger ARPU cannot be collected till the time you have got the better applications or use cases. So in my viewpoint, I think this is going to be a challenging factor. Of course, I think for the market, it doesn't matter because market at this point of time is flush with liquidity. And they want to allocate money across, I think, all the telecom players. So that's where probably I think listed player within Vodafone, the argument is that what is the downside risk? And that is where I think the allocation is taking place. But whereas to me, I think the business clarity is going to be far from away from, at this point of time, I think, from making a large profitable company as far as I think the business is concerned.
I just wanted to point out another sector which is not doing too badly, which is realty this morning. Let's pull up Sobha. Sobha is doing well. India Bulls Finance, a few of those stocks also doing fairly okay. Sobha up 6.5% actually this morning. Akshay, anything that you would bet on in this sector? And after you've seen the first opening rates, have you reviewed your top picks or added to that list?
Firstly, speaking of the reality sector, Sobha is more of a momentum play. Yes, it's seen a strong breakout in the opening trade. So yes, if you're a day trader or kind of interested in a short-term play, this definitely fits the bill. 2067 is the current rate, possibly heading for an upside till around 2095 to 2100. Support is 1970. So from a momentum catch-up play, you can consider Sobha developers. If you're keen on the reality space, then DLF is one stock to watch for. This stock is kind of picking up slowly. The broader chart structure is very strong. From a risk reward payoff to, it is kind of trying to bounce from a support zone of 845. If it does, then 920 can be your positional target. So I'd be more keen on buying DLF from a positional perspective. From a momentum catch-up play, it is Sobha developers. And from the stocks which I have recommended today on the show, I would continue to hold on to ICICI Bank and Voltas, which were my top recommendations. I still believe they have more room to go on the upside as the positive opening in both these counters suggest.
All right. Thank you for that, Devin and Akshay. Great to have you on the show today. We'll take a very short break, but when we're coming back, you'll be hearing from Hindalco Satish Pai talking about their Q4 earnings and more. Stay tuned.
Hello and welcome to Earnings Edge. My guest today is from Hindalco, Satish Pai, who is the MD and CEO of the company. Mr. Pai, thank you very much for joining us on NDTV Profit. To begin with, sir, a good set of numbers. Can you take us through how the volume has been and the realization during the quarter?
So if you look at the outstanding points of this quarter, first I would like to highlight that copper had probably the best ever quarter with 776 crores of EBITDA. Their sales were 135 KT, largely driven by copper rod sales because of the whole electrification wire and cable demand. Our aluminium downstream business also had a great quarter. They bounced back with a sale of 105 KT from the 90 levels as the market demand came in strongly. So these two were the standouts. The upstream business, because the costs were under control, with 32% EBITDA margins, the aluminium upstream also contributed very strongly with 2,700 crores of EBITDA. So put together, Q4 was great and capped off a great FY24 for Hindalco.
How was the pricing and the realization part of it? Because you got a good EBITDA number, but have you seen uptick in the copper prices because we saw a flattish prices about to pick up in the end of December. So how are we placed as far as pricing is concerned in the copper and aluminium?
See, both in copper and aluminium, the pricing was not as much as the premiums, the conversion premiums in the place of copper. And in aluminium, it was the cost of production that was low that helped to drive the margins. The LME in Q4 was only 2,200. So really, it was not the top line driving the margins. It was conversion premiums, cost of production that was driving the margins.
How do you see the demand? Because you've seen good volume growth as well coming in. How do you see demand? Because you spoke briefly about the copper demand, which is coming because of electrification and demand from wires and the cables. But what about aluminium there?
See, aluminium demand is growing very strongly. I'll just give you a data point. About a year ago, India was consuming about 4 million tons of aluminium. In FY24, now the run rate is reaching close to 5 million. So the growth of aluminium driven by, let's say, building and construction, auto, conductor cables, is extremely strong. So I think both aluminium and copper demands in India are growing at 7 to 8% CAGR year on year.
And which are the sectors that are driving that demand? If you can give us an idea of where the demand is actually coming in from.
Okay, so common between aluminium and copper is the electrical sector driven by wires, cable and conductors. Then if you look at the other sectors for aluminium, it's driven by auto, it's driven by cookware, it's driven by building and construction. So all these other sectors are contributing to the growth in aluminium demand.
Can you take us through how you see FY25 looking from point of demand and as well as from a point of volume growth?
See, I think that FY25, the demand is going to be strong. We have started off the commodity prices on a strong footing because both aluminium and copper prices are high. And I think that at least in Q1, coal cost and our cost of production also seems to be under control. So I think that, I am expecting this year to be quite a good year if this keeps up over the next coming quarters.
And that would be led by more of an uptick from prices or again cost controls and, belt tightening, which will ensure that good margins are there?
See, in any commodity business, both the top line and the costs are important. So I think we need prices of aluminium to be good, and at the same time we need that the cost of production driven by coal, CP coke, pitch do not increase too much. So generally a combination of this is required to make sure that we sustain the margins that we saw in Q4.
Can you give us an update of what is the kind of capacity that may come in FY25-26? How are we placed with respect to capex?
So first, FY25, we are planning a capex of 6,000 crores. And it would be fair to say that in the coming few years, we will be doing 7,000 crores of capex. And on the aluminium side, about 170 KT of capacity is going to get commissioned in December. And on the copper side, we have about 25 KT of inner groove tubes coming in. So I think over the next few years, you're going to see quite a lot of downstream capacity coming in both aluminium and copper.
What would the total size of the capex cycle? You mentioned this year 6,000 and next couple of years 6,000 or 6,000 to 7,000. Are we looking around say 20 or 1,000 crores in the next 3 years?
So we are looking actually more like 30,000 crores over the next 3-4 years.
Okay, and does it? And it does not include Novelis. So can you take us to Novelis also? How Novelis is doing, because it's also on an aggressive capex.
So because of federal security laws and the quiet period we are going through, I will not be able to talk about Novelis on this call.
Okay, but you won't be able to give a basic of how the financials have been for Novelis as well?
No, I think, the Novelis did their quarterly earnings cross about 2 weeks ago. I think you will have to look at that transcript.
Okay. One question which I wanted to ask you is that, what was the reason why you went for a Novelis IPO? If you can give us that, because that doesn't come under the federal laws.
No, I think anything related to Novelis IPO, I'm not allowed to talk right now.
Okay, but is it? Will you be selling? Will Hindalco be reducing its stake as part of the IPO, or is it a primary issuance?
Again, I think I will not be able to talk about anything related to the IPO on this call. I'm sorry.
Okay. My final question to you is with respect to you've been we've been looking at margins which are at around 12% odd. Is there enough room for you to increase the margin further?
So look, I think the margins, you have to split it down by business. The upstream aluminium business is running at a 32% EBITDA. So I think that this is probably the industry best. But in Q1, as LME prices strengthen, we think that at least in Q1, those margins are going to expand.
And and any idea how much you expect LME prices to go up in FY25? Because we've been expecting that in FY24, we didn't see much of a luck there. But in FY25, given the kind of demand scenario which you're painting of 7 to 8% growth, do you see enough price hikes coming in?
See, I think that the Q1, April, May has started off very strongly. LME hit 2,700, currently is trading at 2,600. But the market is very volatile. I mean, it can go up and down $100, $150 in a week. So I think I'm staying fairly cautious to say that my expectation is that LME will be between 2,300 and 2,500 on an average this year. But I hope I'm wrong and it's on the higher side.
Okay. And how do you see the China factor playing out in this whole scenario?
I think a lot of what we are seeing is because people are expecting that the Chinese economy has picked up and the growth in China will be strong. So that is one of the reasons why commodity prices are picking up. That and the strength of the American economy is one of probably the two important reasons.
And you're seeing a good rebound happening in the US, right? Because that's what will,
the largest market for commodities, and that's why the demand. See, between America and China, majority of the commodity sales happen in these two areas.
Mm-hmm. And you're seeing FY25, which is going to be a big one for both US and China coming back into play.
That is what the expectations are, which is why the commodity prices are running up.
Mr. Pai, it was a pleasure talking to you today. Thank you very much for joining us on NDTV Profit.
Thank you.
Right, back with India Market Open right here on NDTV Profit. Just want to mark the markets for a minute because we've had let's say a decent start. The question only is, can we pick on from there? So about a 0.2% higher, but individual stocks, particularly the ones in the pharma pocket, have done really well, and I think that is to be noted. So strong moves for Glenmark, strong moves for Torrent. I dare say Divi's Lab has had a spectacular day as well, but Glenmark is of course ruling the roost. I wonder if Aurobindo has done okay, because I think the performance per se from Oro looks strong. It's not featuring in the list of the top gainers. No, it's actually flattish, but the others have actually had a really good move. So in some sense, it's a pharma day. I wonder if Laurus, after the kind of fall that it had in Friday's session, is recovering, or is it still flattish? A marginally higher, out 1%, So that pocket is doing okay. Banks have started participating in trade both Thursday and Friday, and I think it's important to try and take stock of what is the outlook on credit growth going ahead for FY25. Ujjivan Small Finance Bank came out with numbers last week, but it's a good time to get in Itira Davis, MD and CEO of the bank, to try and understand what could happen in the quarters to come. Their quarter on a quarter sequential basis was flattish. On a YOY basis, I think on most counts they did really well. NI was up 27%, PAT was up about 6% YOY. Provisions were also a bit mixed, of course, up about 25% quarter on quarter. Mr. Davis, good having you. Thanks so much for taking the time out. This is Niraj here. Good morning. How do you sense the possibility of credit growth in FY25? Because one of the most common arguments that I see, this is for the banking space at large, not just about Ujjivan, of course, but the most common argument that I see or hear is that corporates, large, mid, small, are not necessarily depending only on banking finance for funding any kind of capex that may have. Any thoughts on this topic, sir?
Good morning, Niraj. Thank you for having me on NDTV. I think it's a good question. You know, we have had 2.5 years of good credit growth. I mean, all banks are doing extremely well. The whole segment is doing extremely well. So I think, the question is, how is the economy going to do from here onwards? And that will also play an important role in demand. And also the deposit creation in the market is getting a bit difficult. Liquidity is a bit tight, although RBI has been seen to, try and put some liquidity into the market. So given, I think maybe in the second quarter, we will see a lot more clarity on this post the election results. But I think, right now, the demand may be slowing in the large cap segment or the large corporates. It's also beginning to slow in the other areas, or rather the lenders are beginning to slow a little bit, even in the small lending space, the financial inclusion space, because, it's a period of consolidation. 2.5 years of growth post-COVID has been fantastic, but, you can't carry on that forever. So I think it is a consolidation phase. And once the new budget is announced and we are into the second quarter of this year, there will be a lot more clarity.
One of the feelings or one of the beliefs, aside of the technical nature of the MTM gains in bond portfolios, is that this large RBI dividend gives more ammo to the government to fund capex. And largely it's been public capex or government-driven capex that has been the driving force behind all the capex spends in the country thus far. The belief is that private sector, except in fits and starts, hasn't quite participated. Does this large dividend give some confidence that capex spends will continue, even if in the near term, until the US elections are out of the way, if at all that is a factor, that private capex doesn't come back in a hurry?
No, I think there's a lot of hope placed on this huge dividend with the government, so that some spending will start and move in that direction. And hopefully, by the fourth quarter, we are hoping that interest rates will also begin to start weakening and decline. So once that happens, some demand will come back through that process. But yes, most importantly, this dividend which the government has received is something that we are all hoping, as participants in the market, that some of that will be spent in capital development, in sort of other outlays. There's been also talk about, increasing the outlay on artificial intelligence and so many other projects which are there. So any of those projects that take off in the second quarter and third quarter will help the the spend in the markets.
Mm-hmm. Okay. What about your own numbers, sir? The NI numbers, etc., all looked okay. Was it provisioning or higher provisioning YOY that hit the bottom line numbers, and what's the reason for the same, and what's the outlook going ahead, particularly on the provisioning and the asset quality? I'll come to growth in a bit, of course.
Right. I think good questions, and as I mentioned, in the other part of the overall discussion we had, there's been 2.5 years of big growth, and there's a lot of credit which has come into the market, and a lot of borrowers. So I think we are seeing a little bit of sort of not pent up demand. It's the excess supply which has come into the market, which is now beginning to rear its head, and there is a bit of concern in credit quality, and that is being seen. Some states we are seeing that people are looking at rescheduling or government support, and therefore repayments have slowed down. In other places, there's been excess supply and over-leveraging has taken place, so that's also coming to the forefront. So like in this business is based on cycles, and this 2.5 years, this is the consolidation cycle, and I think the whole industry has to be prepared for it, especially in the financial inclusion space. And those who are prepared for it will be able to, take it through in the next 6 to 12 months, because we have to see the effect of this wear out, and I think it's an important part of the cycle that we are looking at.
Got it. For your client set in particular, Mr. Davis, is there any kind of concern around maintaining the level of asset quality that you would have? Are there some reasons why, either regulatory or otherwise, that you might go slow in either because regulation is saying XYZ, or maintaining asset quality might be more important than growth, if you will, in the balance that I'm talking about? Can you give us some color there, sir?
Absolutely. I think maintaining asset quality in a bank and in a financial institution is the foremost important thing that we have to look at. And we have all learned that from what happened during COVID and a couple of other crises before that. So yes, that is going to be our forefront. Now, fortunately for us, we are operational in 26 states, and in no state we have exposure more than 15%. And that spread, that diversification helps us a great deal in trying to slow down in some areas where there is an issue which we need to address. And, we can continue business as usual in other areas which are doing well. So I think that advantage is available to us and others who may be concentrated in certain areas. If the area is doing well, great. If the area is having problems, they'll have to address it. So I think this is something that the industry has to take into account, and we have taken that into account, and we have planned for this year based on that feedback. In fact, our guidance on provisioning for this year is a little higher than last year, and that is based on what we are expecting the market to do during the current financial year.
It's not, well, technically what you're guiding to also in FY25 on the margin front, Mr. Davis, is not moderation, but if I just look at the pure play numbers, what you did currently 9.4 versus what you guided for FY25, 9%, you would say maintenance of margins, or would you say that no, there is a bit of a moderation that you're guiding to?
The margins, it's a question of how we also manage internal liquidity and other ratios and things like that. So, we are expecting the interest rates to stay high at these rates till about the fourth quarter. So there's not going to be any benefit from a downward turning interest rate curve, which will definitely come in the next financial year. So for this financial year, the guidance of 9% has been based on continuing where we are, trying to hold on to the current interest rates on the term deposits and other and CASA, and building the CASA a little bit. We are at 26% on the CASA. We'd like to see that move towards 30%. And as that moves towards 30%, we'll be able to benefit from that on the NIM front. because that will reduce the burden of the term deposit interest. So it's a question of managing all these ratios from which we are able to see NIMs play out to 9%. So all in all, I think that is not going to be an issue. It'll allow us to build in some capacity to take care of the additional credit requirements.
Mm-hmm. Okay. One final word, sir. I heard you mention at the start of this conversation that a lot of things hinge on the performance of the economy. All global forums, global investors, etc., all believe that the numbers, I mean, for them, India relative to the rest of the world is good growth. I'm just trying to understand related to what India has done in the last 2-3 years. The earnings growth has been stupendous, but we've had 4 years of very strong earnings growth for India Inc. at large. Do you think we can do an encore on GDP and earnings, or could there be a bit of a moderation because of a number of things, including the fact that the election code of conduct takes away some of the business decisions for the first quarter at the very least?
Yeah, some moderation may happen this year, but that moderation doesn't mean that we are slowing down overall. We are still doing much better than other countries, and in the G20 itself, we are doing very well. So I think moderation is not a bad thing by itself, but the level of moderation is important. A little bit here and there adjustments are often welcome, as one step backwards perhaps before taking 2 steps forward. And I think that is from time to time we have to look at that and see how to manage that situation.
Got it. Mr. Davies, great talking to you. Thanks so much for being with us and giving us your thoughts. Really appreciate your time.
No, thank you very much, Neil.
That's the view from the MD and CEO of Ujjivan. Well, as we said, I think it's Pharma which is ruling the roost. Though I must say, there's some strong moves in Thermax as well in the session today. Just looking at the color of the market before we wrap up this show. AstraZeneca up 8%, Glenmark up 6.5%. There is Divi's Lab up 5%. There is Torrent Pharma up 4.7%. So that's the list of names which have done well. Of course, what has not done well is Biocon. Biocon is down about 3.5% today, if I'm not wrong. Just pull that stock up for you. And that stock is down about 3.5%. That's one hitch. Aside of that, there is strength in Thermax, up another 4.5% today, on a day when some of the others like ABB are actually correcting in trade. So that's the other interesting mix out there. The Thermax is kind of doing a bit of a solo show. It's not that it's across the board. There is strength in Symphony today, 4.5% higher. So that stock is doing okay. So keep that in mind. And among stocks that are correcting today also is Manappuram Finance, which is down 2.5%. And PNC Infra, which is down 2.5%. Manappuram, presumably on that result miss. No, let's say Manappuram Finance. PNC Infra is down 3%, but Manappuram Finance, on that results miss, is now trading at the lowest point of the day. Fair degree of long positions exist here, but the stock is taking it on the chin. Let's wait and watch if there's a bit of a bottoming formation happening here at some point of time, or is this likely to be the course of what the stock does. So some interesting price moves early morning within the first 1 hour of opening trade. That's it on India markets opened. Up next, though, is Talking Points. Stay tuned. We'll be in conversation with Anirudh Sarkar.